Let's face it, the traditional finance department is struggling, big time. It's built on a mountain of spreadsheets, endless manual reviews, and rules that just feel rigid. But the modern world of business, with its chaotic global supply chains, non-stop cyber threats, and markets that shift on a dime, is moving way too fast for those old systems. The entire playbook is being rewritten, and finance teams are feeling some serious pressure to keep up.
And this isn't just some vague feeling people have. It's a hard fact. A recent survey showed that a whopping 75% of organizations flat out admit they cannot keep pace with the rising demands of risk management. Now think about that for a second. What does it actually mean for the global economy when 3 out of every 4 companies are basically flying blind? It means the old way of doing things isn't just slow, it's become a critical liability.
But the heat isn't just coming from the outside world. The very role of a finance leader is completely transforming. You see, the modern CFO is no longer just the numbers person, not even close. Over 70% of them now have strategic responsibilities that go way beyond traditional finance. They're expected to be part data scientist, part visionary, constantly modeling different futures for the company.
So what you end up with is this huge clash of 2 different worlds. On one side, you've got the old way. Slow, periodic reviews, always reacting to problems after they happen, and relying on people to analyze things, which means they can easily miss the big picture. And on the other side, the new reality. It demands real-time monitoring, proactive prevention, and the power to process insane amounts of data at scale. That gap right in the middle, that's where businesses are most vulnerable.
Okay, so this is exactly where the new AI toolkit comes into the picture. And it's not just one single piece of tech. It's a really powerful combination of systems that are fundamentally rewiring how finance actually works. So let's break down the key components that are turning all this pressure into a real competitive advantage.
First up, we've got machine learning, or ML. The best way to think of it is as a super-powered pattern finder. It sifts through millions, even billions of transactions or market signals, and it just learns what normal is supposed to look like. So what does that mean in the real world? Well, think about your credit card. You know that instant fraud alert you get when a weird purchase shows up? That's an ML model that spotted a transaction that just didn't fit your usual spending pattern. It's the exact same kind of tech that can predict loan defaults way before they actually happen.
Next in our toolkit is natural language processing, or NLP, because, finance isn't just about numbers. It's also buried in contracts, regulations, and reports. NLP gives machines the incredible ability to read and actually understand human language. This means a system can automatically scan thousands of pages of new regulations to flag what's critical, or review complex legal documents for key clauses. All of this ensures compliance without needing weeks of manual review. And this right here is where we see that massive shift from being reactive to being proactive. See, predictive analytics doesn't just tell you what happened yesterday, it forecasts what could happen tomorrow. By analyzing historical data right alongside real-time info like news feeds or even weather data, it can start to anticipate things like supply chain disruptions or sudden market swings. This gives leaders the time they need to act before a problem turns into a crisis.
So, the real magic here is how all these technologies connect and work together. It's a pretty seamless process when you think about it. ML and NLP process these huge amounts of raw data. Then, predictive analytics uses that cleaned up data to forecast what's coming. And finally, intelligent automation can actually execute a response, like flagging a high-risk transaction or instantly alerting a supply chain manager. It literally transforms raw data into intelligent, automated action. Okay, so that's the theory. But how is this stuff actually being used today? Now that we kind of get the technology, let's look at how it's being put to work with real tools and platforms that are already changing the game for every major finance function. Let's start with financial planning and analysis, FP&A. Here, AI is an absolute game changer. For example, platforms like Runway are making really sophisticated scenario modeling accessible even for startups. So instead of spending days plugging numbers into spreadsheets, a leadership team can instantly ask things like, hey, what if our growth slows by 15%? Or what's the real impact of hiring 10 new engineers? And they can see the effect on their financial future in seconds. It's turning strategic planning from this clunky quarterly exercise into a dynamic, real-time conversation.
And what's really interesting is how the market is adapting. There's a tool for pretty much every type of business now. This is not a one-size-fits-all kind of deal. A platform like Compass AI, for instance, is built for the speed that small and medium businesses need. You can get it set up in minutes. But then on the other end of the spectrum, a massive global enterprise might turn to a super comprehensive platform like ProFix1 to manage their complex operations. The right tool really just depends on your specific situation.
Now, for risk and compliance, AI is creating a totally new level of trust and security. You've got tools like MindBridge that can analyze 100% of a company's financial transactions to spot anomalies and potential fraud. That's something a team of human auditors just physically cannot do. And then you have platforms like Trillion that are automating compliance by literally reading contracts to make sure revenue and leases are accounted for correctly under really complex standards like ASC 606.
And the impact, it's dramatic. We are not talking about small, tiny improvements here. Finance teams that have actually adopted these AI tools, they're reporting up to a 50% faster month-end close process. Think about that. This isn't just about doing things a little bit better. It's about doing things completely differently. It fundamentally changes what the finance team is capable of, freeing up hundreds of hours from tedious manual work that can now be spent on actual strategic analysis.
And finally, let's look at core accounting and operations, because the automation here is just profound. BlackLine is using AI to automate the incredibly painful process of account reconciliation. Meanwhile, Stamply uses it to capture and process invoices with over 99% accuracy. These tools are taking on the most repetitive, time-sucking tasks that have always bogged down finance teams, and it's allowing them to focus on much higher-value work.
But it's not all just seamless automation and happy efficiency gains. Let's be real, adopting AI isn't as simple as just flipping a switch. It brings a completely new set of challenges and risks to the table, and organizations have to navigate them really carefully if they want to avoid some pretty serious hidden traps.
Which brings us to a really important question. Is AI really a silver bullet for finance? The short answer? No. It's an incredibly powerful tool, for sure, but like any tool, its effectiveness depends entirely on how you use it. So let's take a look at the real-world limitations. And it all starts with one thing: data. You've probably heard the old saying, garbage in, garbage out. Well, it has never been more true than it is right now with AI. An AI model is only as good, only as reliable as the data it's trained on. So if your data is incomplete, if it's inconsistent, or if it reflects old biases, then the AI's predictions are going to be inaccurate and unreliable. Having strong data governance isn't just a nice-to-have anymore, it's an absolute must for success with AI. And beyond just the quality of the data, there are other major hurdles. A lot of these complex algorithms operate as what we call black boxes. This means they can give you an answer, but they can't always explain the reasoning behind that answer. Now, imagine trying to explain to an auditor, or worse, a regulator, that a critical financial decision was made by an AI, but you can't actually show them the logic. It's a huge problem. On top of that, you've got the high costs of implementation and the sheer difficulty of getting these new tools to talk to decades-old legacy systems. It all means you need a crystal-clear ROI strategy from day one.
But, despite these very real challenges, the direction we're heading is clear. We are absolutely moving towards a future of autonomous finance. So what does that future actually look like? Where is all this technology heading in the next few years?
Well, the evolution is really a shift from assistance to autonomy. Right now, we're mostly in the era of predictive analytics, where AI gives us insights to act on. The next big step is the rise of autonomous agents. These are specialized systems that can monitor risks and even execute responses with very little human oversight. And if you look even further out, we're starting to see a move towards decentralized governance. Think of it less like a top-down corporation and more like a co-op, where the community of users has real voting power over the platform's future. Here's a perfect example of that new model in action. This is the token allocation for AlgosOne, which is an AI trading platform. What's so striking here is that 90% of the tokens are allocated directly to the public and the community. This isn't just about using a tool anymore. It's about giving users a genuine stake in the whole ecosystem. It represents a fundamental shift in the relationship between a platform and its users. They're not just customers, they're owners. And all of this leaves us with one final, and I think pretty provocative thought. As AI gets better and better at handling the what, like what is our current financial position, and the how do we optimize it, the role of the human finance professional is going to shift again dramatically. The most valuable skill won't be processing data. It'll be providing context, exercising ethical judgment, and asking the single most important question of all: why?